in fresh form than they are repaying on old debts. There are many ways to do that, but I'm basically saying don't print money. I've never believed in that because you just get high inflation, but rather let's get a financial solution that doesn't condemn the country to default or to bankruptcy or to extreme austerity. That's actually always been my policy recommendation since I started this approach in Bolivia in 1985.
And is it achievable under the current circumstances when the US Fed is fighting a 40-year high inflation and has been pushing up interest rates higher to the unprecedented high for, let's say, several decades going back, because that's actually been increasing the debt load or debt gearing of and debt servicing costs for all the EMs or developing countries?
It's going to be a close call for several reasons, but let me put it this way. Currently, the 30-year bond rate of the U.S. Treasury is about 3.2%, still quite low. The 30-year bond rate for German debt is still around 1%, actually. The 30-year bond rate for Ghana or for an emerging economy, if they can get a 30-year loan, is 10%. In other words, I am advocating a significant increase of official financing at interest rates that the Treasury or the German government or other Eurozone countries pay themselves. The real room for maneuver is that the interest rates paid by the high-income countries are still very low compared to what the emerging market economies face. What I'm suggesting, therefore, is a major expansion of funds coming from the World Bank, the European Investment Bank, the African Development Bank, the Asian Development Bank, that essentially can borrow on terms very close to what the US government or German government or Japanese government can borrow at, and therefore lend at quite low and long-term interest rates to emerging markets that, if they are left on their own, face horrendous terms that would drive them into default.
And then we are back into the whole idea of the currently lack of cooperation will on the global level. We have to get back to...
There you go. So I'm recommending to the G20 this approach. But is there a G20 even right now? Countries are barely talking to each other. The US and Russia literally are not talking to each other, of course. US and China barely talking to each other and cooperating on something as bold as avoiding a financial crisis. Somehow it's not going well. And for me, all through my career, even when I didn't understand it properly at the time, it has been determined by geopolitics. Will something work or won't it work? Because you need cooperation. If the cooperative environment is there, a lot can get done. If there is no cooperation, the chance for a contagion is very, very real. This, I think, is what we face right now.
I have a last question on this topic. The ECB is facing a real difficult times and dilemma. Even, I mean, it's behind the tightening curve, launched by the Fed earlier in the season. What can ECB do to actually, put its policies back straight on the right course of sustaining that kind of development and preventing any global financial crisis, or maybe world financial crisis number 2 following 2008, 2009?
Well, I think Europe is in an extremely difficult situation, not mainly because of the ECB, but mainly because of the war in Ukraine and the vulnerability on energy, obviously. Europe's already in a downturn. It could get quite severe in the coming months. My position on this is not popular in Europe. among the politicians. But as I've emphasized, my position is that there is a negotiated way out of this. I don't believe the NATO line that, well, we're just going to fight till we defeat Putin. If that is the approach, I don't think it's going to succeed on the battlefield. And I also think that the consequences economically will become quite unmanageable. The crisis will be very serious in my view. Now, maybe I'm too pessimistic, but I believe that the energy crisis and all of the uncertainties around it and all of the other ramifications, and you compound that with the growing break with China as well, I think will lead to a very significant crisis in Europe. And since we see the politics are already quite unstable in a number of countries, including Italy, for example, where the Draghi government has just fallen, and who knows what will happen next with elections coming up. I think that the chance of revisiting a deep Eurozone crisis becomes very real. So I don't see the pieces working very well right now. And the ECB can only do so much in this context. I think it's going to have an extremely difficult time unless we find a way to peace and to easing the very, very high tensions right now.
You are viewed, and correct me if I'm wrong, as the co-author or co-father of the United Nations development goals that are used in the currently, often discussed ESG policies. And you are the Columbia University Director of the Center for Sustainable Development. And what does it mean? What is your